Oil and gas investments have been one of the most lucrative, often yet misunderstood asset classes in the world of private investing. In this video, I want to give you a clear, no fluff breakdown on oil and gas investments, the risks that are involved with investing in oil and gas, the potential rewards that you can receive as a private investor, and why this asset class continues to bring high net worth individuals like yourself and business owners all over the country into this opportunity. Now, what is direct oil and gas investments? First off, we're not talking about buying stocks in big oil companies or anything like that. A direct investment in oil and gas is actually into the well itself. So you're investing into the drilling and production process of the oil well. This is usually going to be done through what's called a working interest or a limited partnership in a drilling program. So as an investor, you're sharing in the cost of the well, but you're also sharing in the monthly production revenue from what the well produces as far as the oil that comes out of the well for the month. Now here is how oil and gas returns are generated. Oil and gas returns come from the actual sale of the oil and gas that is extracted from the ground. Once a well is fully drilled and producing oil and gas, it begins generating monthly cash flow, sometimes within 30 to 60 days. Now, production revenue can depend on several different factors. One being the daily production volume, so how many barrels per day that well is producing. Two is commodity prices, which can fluctuate daily. And three is obviously operating expenses and royalty costs. In oil and gas, each investor's return is actually based on how much that investor initially contributed to the oil and gas project, as well as the actual performance that the well has produced. In some successful cases, oil and gas wells can produce for years and even sometimes decades. Now, one of the main reasons why oil and gas investments appeal to high-income investors and business owners is because the unique tax structure that oil and gas investments allow you to receive. Now, here are three key benefits that can help you as a private investor in oil and gas with tax deductions and tax benefits. One is going to be intangible drilling cost. Intangible drilling costs include expenses like labor, site prep, and chemicals that were used for the project. Now, the IRS actually allows investors to write off about 70 to 80% of intangible drilling costs the first year that the investment was actually made. Number two is going to be tangible drilling cost. These are things like drilling equipment, when in most cases, the tangible drilling costs are going to be depreciated over a few years to come in the future. Number three is depletion allowance. Depletion allowance is actually a permanent tax benefit, usually around 15%. So any of the share that you have in that oil and gas project can be received 15% tax-free. Now, all these deductions are thanks to IRS Code 263. And those are the main reasons why oil and gas can be such an attractive investment for high-income individuals like yourself. Now, the risk and consideration that you need to know before investing in oil and gas. Now, of course, like any investment, especially one in natural resources, there are going to be risks. Now, things like geological risk, commodity price swings, regulatory changes, or even operational issues can impact performance of your oil and gas investment. That's why for you as the investor, it is critical to find an operator who has a proven drilling process that has been successful and who focuses on transparency with his investors. Now, ways to mitigate the risk. You'll see many oil and gas investors mitigate their risk by spreading out investments over multiple projects in proven locations, like the Powder River Basin, the Permian Basin, which a lot of you are probably familiar with, as well as Eagle Ford. Now, who typically invest in oil and gas projects? Most direct oil and gas investment offers are through Regulation D offerings. That means that it's only available to accredited investors. This means individuals who are earning $200,000 more in annual income or have $1 million net worth, excluding their primary residence. If those things apply to you, oil and gas can be a very strategic investment for you to look at moving forward in the future. Now, is oil and gas the right investment for you? For investors looking for a hard asset with high yield potential and strategic tax benefits, oil and gas remains to be one of the most strategic and underutilized tools in private investing. Now, whether you invest in oil and gas or not, it is still good to understand the fundamentals of oil and gas investing and how they could potentially benefit you as a private investor in the future.